Hey everyone, welcome back to Corporate Dakota, the place where we decode the language of big business. Today we're diving into a proxy statement from Conifer Holdings, but hold on, because it looks like they're planning a name change. You know what they say, you can put lipstick on a pig, but it's still a pig. We will see if a new name can help this company. Keep watching to find out. Before we start, if you want straight insights from company reports, make sure you're subscribed to the channel. We also have a Discord community, which is linked in the description below, so you can join the conversation. This document is a proxy statement. Basically, it is a notice to shareholders about an upcoming meeting and how they can vote on important company matters. Conifer Holdings, which might soon be Presurance Holdings, is asking its shareholders to weigh in on a few key proposals, from electing a director to changing the company's name and even doing a reverse stock split. The annual meeting is scheduled for June 3rd, 2025. This year it's virtual, which the company claims provides greater access so people can listen live, ask questions and vote online. This sounds good, but maybe also a way for the company to not have to deal with uncomfortable shareholders in person. One of the big items on the agenda is a proposed name change. They want to switch from Conifer Holdings Inc. to Presurance Holdings Inc. It might sound simple, but name changes can signal big shifts in a company's strategy. The company is also asking shareholders to approve a reverse stock split. This is where they would combine a number of existing shares into one new share. The ratio could be anywhere from 1:4:2 to 1:4:12. The board of directors gets to pick the final number if shareholders approve. They also need approval to issue up to 4 million shares of common stock. This would happen if existing warrant holders decide to exercise their options to buy those shares. Finally, they are asking shareholders to approve on an advisory basis the compensation of the company's top executives. It is basically a say-on-pay proposal. The board is recommending that shareholders vote for the election of the director and also for all the proposals, including the name change and the reverse stock split. One of the reasons cited is the sale of their insurance agency operations. The company no longer has any insurance agency operations. They think the new name, Presurance Holdings Inc., would better reflect the direction of their business. The name change won't affect your existing stock certificates. The company expects to keep their listing on the Nasdaq, but they will use the new ticker symbol PRHI as soon as possible. Next up is the reverse stock split. Let's dig into what this means and why a company might do it. One big reason for the reverse stock split is to comply with Nasdaq's continued listing requirements. If a company's stock price falls too low, it risks being delisted from the exchange. This is why they need a reverse split. The board admits there are negative feelings about reverse stock splits from some investors. Some people think the stock price of companies that have done reverse stock splits decline afterwards. The company can't guarantee that after the reverse stock split, the price will stay above the minimum 1.900 required by Nasdaq. The reverse stock split will create fractional shares. To avoid this, the company will round down the fractional shares and pay the shareholder cash for the partial share. Shareholders will get cash based on the closing sales price of the company's common stock on Nasdaq, the day before the reverse stock split goes into effect. Also, a reverse stock split would increase the company's authorized but unissued shares of common stock. This is because the number of authorized shares will not be reduced in proportion to the reverse split. This gives the board the power to issue more shares in the future without needing shareholder approval, which could dilute existing shareholders' ownership. Now let's talk about issuing shares upon exercise of the warrants. The company is asking for approval to issue up to 4 million shares of common stock if warrant holders exercise their rights to buy those shares. It looks like they need shareholder approval under Nasdaq rules before they can do this. It is worth noting that Clarkston 91 West LLC is affiliated with Gerald and Jeffrey Hakala, who are members of the board. If the shareholders don't approve this proposal, the warrants won't be able to be exercised in a way that complies with Nasdaq rules. This may discourage investors from engaging in future financings. Finally, let's get to the auditor. The audit committee has already appointed Plantan and Moran PLLC to audit their books for the year ending December 31, 2000 now. They're asking shareholders to ratify or approve that appointment. Here's a look at what they paid the audit in the past. In 2024, audit fees were $750, $720, $720, $723, from $801,000 in 2023. So the total fees were $881,000 in 23. So the total fees were $881,000 in 2023. The audit committee has to pre-approve all audit and non-audit services performed by their accounting firm. This is meant to make sure the auditors stay independent. All right, here is what all of you have been waiting for, the executive compensation. Let's see who made what. Brian Runney, the current president and CEO, had total compensation of $757,555,000 and a bonus of $318,750. Nicholas Petkoff, the former CEO, had total compensation of $930,041 in 2024. His salary was $283,334 and $375. Note that his employment terminated in August 2024. Harold Meloche, the chief financial officer, had total compensation of $572,800 in 2024. This includes a salary of $320,000 and a bonus of $240,000. Nicholas Petkoff resigned in August of 2024. It looks like a lot of executives have stock options. Let's quickly check out who owns this company and how ownership has changed in the last year. Jeffrey Hakola and Gerald Hakola both beneficially own 42.1% of the company. They have 3,735,769 shares. All the current executives and directors as a group own about 59%. The table shows that there has been a 50.31 total shareholder return. The company has a policy to make sure related party transactions are reviewed by the audit committee or disinterested board members. It is worth noting that there are family relationships within the company. The company sold $6 million of newly designated Series A preferred stock to Clarkston 91 West LLC, an entity affiliated with board members Gerald Hakola and Jeffrey Hakola, back in December 2023. In February 2025, they issued more Series B preferred stock and a warrant to purchase 4 million shares to the same entity. Alright, so what's the overall picture here? Conifer is trying to navigate some choppy waters. They sold off their agency operations, which signals a shift in strategy. The name change and reverse stock split seem aimed at keeping them listed on the Nasdaq and attracting investors, but there are risks involved, like negative perceptions of reverse splits and potential dilution of shares. The company seems to be heavily reliant on certain related party investors, but there are risks involved, like negative perceptions of reverse splits and potential dilution of shares. The company seems to be heavily reliant on certain related party investors, but there are risks involved, like negative perceptions of reverse splits and potential dilution of shares. The company seems to be heavily reliant on certain related parties for financing. This could be a double-edged sword, providing needed capital but also raising questions about conflicts of interest. A lot of their big moves, like issuing stock and selling companies, is influenced by their existing ownership. Conifer is at a crossroads. The leadership wants to change the company's image with a new name, stay compliant with Nasdaq listing, but will this be enough to attract long-term shareholders? It will be interesting to see how the market reacts to these moves. Alright, that's our breakdown of Conifer Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.